right, it seems like people are coming in. All right, hi everyone. Welcome back to another Closing Bell. Today is a special show. We got a really special guest coming in the show a little later today. Sorry about all the delays. We were having some technical difficulties. But if the sound quality is good, give us a thumbs up so we know everything is good and we can start. We got Andrew in the office. Andrew, how you doing, man?
I'm doing well. Summer has officially started in Vancouver. It's actually pretty warm right now, so I'm full into summer mode with pants on, with shorts on, and shaved, ready for the season.
That's amazing. I'm just emailing Rinesh, our guest, just to let him know we're probably gonna have him a little bit later today, just because we started a little later. But wow. Man, what a day! You talked about in your morning session in the chat. You talked about how Europe wasn't able to actually hold on to the gain from the early morning session, and it actually closed flat or negative for the day.
I think closed Europe. I can go into trading terminal.
Yeah, actually closed down about 1%.
Yeah, so down 1%. So I'm back into trading terminal. If you watch my screen, so Europe closed 1% down. Germany. Almost 1% down, so Europe down 1%. They had the rally yesterday, but they couldn't hold it. And it seems that today market is actually pretty much exactly flat. Like literally SPY is 0%, Qs minus 0.1%, and most of the indexes are flat. Dow Jones is literally zero. So we are at the flat
very,
day.
very, very similar, very correlated move again. Today was interesting. We gapped down, was a strong. Wasn't able to hold the rally, came flirted with previous day close, and right now is just around the previous day close, both on the Qs and the Nasdaq. Another thing that I want to talk about, and we've been talking about this for a while, is Bitcoin down 3.5% today, below the 20,000 mark, so 19,000 on a day that indices are holding up pretty well, pretty nicely. And we've talked about how the correlation between Bitcoin and Nasdaq 100 has been broken since the last few weeks. So if you look at the QQQ in the last 3 weeks, and you look at Bitcoin or anything that follows Bitcoin, maybe GBTC or anything like that, you can kind of see that this correlation has been broken. And I was having a conversation last week, and someone was saying, oh, if Bitcoin collapses, it's going to be a systematic risk for the whole equity market. And I have to respectfully disagree here, because as Bitcoin becomes smaller and smaller in terms of market cap, so now it's at around 800 billion, it becomes less and less of a systematic risk. So it's like another company, it's like an Enron going bust in 2002. Like it's not going to bring the whole market down.
That's anymore. A very, very interesting point, Ali. You said when you are short and the market is going up, your problem is getting bigger and bigger, because now you have to cover at a bigger price. But when you have a position, your position keeps going down, your problem is getting smaller and smaller. Like if I have a position that I'm down 50% on that, and if it drops another 10%, it's like 5% of my original position. It's just your value is just going smaller and smaller. And I have the GBTC weekly chart. This is a Bitcoin trust, so it has a combination of Bitcoins in there. If you look at my screen, we are down to below the mania of 2018. The price is trading right now at $12,000. I mean, obviously we had this mania of the late 2020 and 2021, which prices went up to $55. This is the index, by the way. You see that it's really crazy, and there is definitely no love to Bitcoin at this stage.
Go ahead, please.
Bitcoin itself broke down to $20,000, and that's still going down.
I read something this weekend about GBTC. So for the majority of the mania, Andrew, when Bitcoin was going up, the net asset value of GBTC was actually trading at a premium. So you were paying a little extra for the Bitcoins in there. You were much better off just go and buy the Bitcoin, through a cold wallet, through an exchange like Coinbase or Binance. Now it's actually trading at a discount. So the net asset value, like the amount of Bitcoin the GBTC trust holds versus the value that is trading at a discount. So there could be a little bit of an arbitrage opportunity, you buying the GBTC and then shorting the Bitcoin for that misprice. I mean, assuming that it's going to go back to the normal price.
That's arbitrage. Arbitrage traders in the past specifically, that was a big opportunity. Most of the investment banks, they had the arbitrage trading desks that they were finding this mismatch of prices and quickly execute those trades. But with the ECNs and exchanges are getting electronic, this arbitrage is going less and less. But I know there are companies that, for example, they had algos writing on different exchanges on cryptocurrency and trying to find these mismatches and quickly execute that trade. Definitely something over here, but overall there is a weakness in all cryptocurrency sector we're seeing right now.
So before we start, let's give our audience. We got quite a few people joining in. Well, thank you for joining the show and being a friend of the show and supporting us. We can't wait to see you this weekend in New York. But a little bit of a foreshadow of what's about to happen in today's show. Of course, we're going to talk about the market. What are we seeing? Jerome Powell came to the Congress today and testified in the Congress. So we're going to talk about that as well. Some of the information there. Inflation, market overall, lots of stuff. And then later in the show, in about 10 to 15 minutes, we're going to have a guest. So Rinesh is actually joining the show. He's been trading for a few years, since 2018, I believe. And he's been consistent for the last little while. His story is fascinating, from losing almost all of his retirement account to finding Andrew and finding Ed and really clicking with Ed and Ed's chat room and building his account back up. So if Santiago could go to my screen, this is his equity curve, and you can see he's been very consistent since the late September 2021, and as you can see, this equity curve is completely uncorrelated with what happened with the with the stock market. So when the market was going down, it didn't really impact his equity curve. So really excited for him to join the show. Make sure you stick around for the whole show. It's going to be an awesome conversation. Let your friends know so they can join as well. It's going to be awesome. But yeah. Let's get into it, Andrew. Let's talk some market. What do you think?
Yeah, please do that. But before that, for those of you who are there, hey, Dell the Day Trader, we appreciate a like, subscribe to our channel, give us a thumbs up so our video gets a little bit more exposure by YouTube algos. That means a lot to us. Markets a little bit into the red. Nothing crazy, but a little bit into the red. What I saw that one of the companies that are actually moving up really nicely is Netflix. Netflix was up 4%. I don't know if it's actually holding those. Yeah, it's almost 5% up. So somebody's taking a position in Netflix apparently.
Yeah, can you go to the intraday charts, Andrew, on Netflix? I just want to see what's. Is it pretty sustained all day?
Sustained all day move. This is happening sometimes when there is a fund or someone taking a position.
Yeah.
They do that specifically. That on a day that is market is kind of weak. It seems that when the price is consistently above the VWAP, means that there is some position taking somewhere around here.
Are you buying Netflix for your long-term account or
I personally don't. I think Netflix has some serious competition going out, and most of the content creators are pulling out their contents from there. Disney Plus, Apple, Prime, Crave. There's so many. Competitions are directly impacting them, and I personally was one of those 200,000 people that canceled the Netflix, and I never resubscribed because I just don't have time, and I think it's not really that much of a great content.
Really? You're not a fan of Stranger Things?
No, I am not, no.
I loved the season 4 Stranger Things, by the way. I think it was a great show. But anyway, can't wait for the volume 2. Let's talk about agenda. We want to talk about Ray Dalio. Ray Dalio did a series of tweets today talking about the Fed and why he believes Fed's making a mistake and stagflation is imminent. We're going to talk about some of the trading styles for stagflation, so what to trade, if you got a longer term account, how to position yourself if a stagflation happens. But before we do that, let's talk about the NFT NYCCon. So we are going to New York. Apparently there is a event happening, NFT conference that is happening right now, and these are the pictures. Somebody put this on Twitter and said, look at the attendance. I think this is a joke. I think this is before the show started, but as you can see, very low attendance and not as much as previously anticipated.
Yeah, so I would be surprised when people will go to an NFT conference? I mean, what are they trying to get that?
Sometimes when we talk about, when we criticize the crypto market and NFTs, I just, my only biggest fear is that what if we're like the fools in the 2002 that we're saying internet is a fad? I hate to be that person, so
I think knows? NFT has, in the world of, digital ownership, has some values in terms of digital ownership and, the proof of, authentication.
Yeah.
But the way that they were flipping, JPEGs for profit, I think I didn't understand that part, that, you can have a JPEG file, buying it in 2 Ethereum and selling it to 5 Ethereum and make $10,000. That concept wasn't really the thing. I mean, I understand the art as well, and people would pay for art, but these are just JPEG files. There is no, like even the Bored Ape Club that, people pour millions of dollars on that. I would be surprised if anyone in this economy would pay for such JPEG files.
Yeah, definitely. I mean, it goes without saying, my knowledge with all the blockchain and stuff, the science behind it is very limited. So everything I say, take it with a little bit of grain of salt. But from my limited knowledge, I heard about, with the NFTs, you buy it, and then if you resell it, the original person that sold you that NFT gets a royalty. So it's an amazing platform for artists, right? So it's a great copyright enforcer, basically. So I can definitely see maybe in the next 5-10 years, it will be part of our ecosystem and economy. But again, as Andrew said, some of the speculations were getting ridiculous. That guy that bought like $2.5 million, he was actually an Iranian guy, $2.5 million for Jack Dorsey's first tweet, sold it for like $400 or something.
Tax loss achieved. These people actually claim the tax losses. So here's another thing is you buy something and you sell it to another person. That person is not trackable because through the digital wallets, and then you claim a $2 million loss on a piece of art. That tax loss achieved. So that's, if this is not just manipulating the system, I don't know what it is, but you have to report these gains and losses over, digital assets as well. Yeah. So some people say that's a perfect, getting out of some tax payments.
Yeah. Johnny trades in the chat is like, smash the like family. Yeah, definitely smash the like. Dale the Day Trader is also in the chat. He's one of our traders currently in the PCT bootcamp in Cuba. Dale the Trader, I am going to send you this book, by the way, since you're in Cuba and can't purchase it. So I'll send you. I just haven't had the time. I haven't forgot about you. Just wanted to give you the shout out. Let's talk a little bit about market, Andrew. I did some research, and our intern, our analyst who's working with us also did some really interesting research. And we're basically the worst start of the year since 1970. So the worst half since 1970. So, we talked about there's two fears in the market. There's a recession fear and inflation fear. And this is now basically, since the 1970s, one of the worst first half of the market. And I collected some data that I think is going to be really interesting for people to take a look at, just to see where are we and how much lower we could go or we could not go. So let's take a look at this information because I think they're interesting. So if we can avoid a recession, the third biggest post-World War II non-recession corrections are negative 26% in May of 1946, negative 28% in December of 1961, and negative 33% in 1987. So these are non-recessionary corrections. So we know we're at about 44% right now. So we're just around there, we're hovering there. But if we actually do get into a recession, the bear markets that are because of recession are a lot uglier. So the median is 24%, and 57% was the largest, which happened in 2007 financial crisis, the GFC. So we're somewhere around here right now. It could just be this, because again, we don't know if we're going to experience a recession, or it could be a lot worse. So the 2020 34% drawdown, 1970, which we hear a lot of comparison, was a negative 36%, and of course the financial crisis of 57%. A lot of questions here, what's going to happen, a lot of uncertainties, but looking at data could be really helpful. Thoughts, Andrew, on these?
No, I think that's very interesting. I mean, the financial crisis of 2007 and 2008 2009. I don't know. Are we really that bad that the unemployment can hit to 10%, 12%?
Yeah.
So Ardi, you skipped the Ray Dalio part. Did you? What was he saying? Are you getting into that? Or?
Yeah, I was planning to get into that. I wanted to talk a little bit more about recession and inflation, and then link it back to what Ray Dalio has said, because it's kind of, and that's the closing bell, by the way. It's kind of related to that. One thing I wanted to say was this really interesting chart that I saw on Bloomberg, and I think we were talking about this before the show starts. So this is kind of the swap rate of where the market thinks the 3 months treasury is going to be, but in 18 months. So this is a swap forward rate. So if you want to invest in treasuries, but you have a lump sum of money that you're going to get in 18 months, you usually go to investment banks and you ask for a swap rate. Basically, what is the rate going to be in the 18 months based on their estimate? So one of the things that you look at is the swap rates, and that's only about 3.5%. But when we look at the Fed's dot plot, so that's what the Fed give us, they're estimating at about 4% by end of 2023. So basically the market, at least the swap market, is telling Fed, we don't believe you. You're bluffing here, because there is no way you can get the rate to 4% without breaking something.
Yeah.
That's why the swap market is basically pricing these Fed's fund rate in 18 months at only 3.5%. So someone is wrong here. It's either the Fed.
Has there been any divergence before in the past that the swap market was actually cutting Feds and bluffing, but they were wrong or they were right?
Usually majority of the time, they look at the spreads. So like the 2 and 10 or 2 and 5 or 1 and 10. And usually these spreads are a lot more accurate than the Fed's fund rate when you look at them historically. And that's where the saying comes that, hey, the bond market is the smartest market out there, is because when they usually tell you, when the yields start getting flat or get inverted and they tell you, hey, there is a recession, that's usually what happens, right? Because again, a major part of recession is also the capital allocators thinking. So if the CEOs stop spending, stop hiring, even if we don't actually go to a recession, it's going to cause a recession because everyone's thinking about a recession, right? Yeah. So it's very inducing. But this information was really interesting, this swap rate and where they're pricing in the Fed's fund rate. So they basically calling the Fed's bluff. They don't think they're going to be as aggressive on the rate hikes, and that was one of the reasons that the bonds were really strong today, right? Like if you take a look at IEF, which is the 10-year bond, Andrew, I think it was up 1.5%.
Yeah, a TLT, which is 20 years, is up 3%.
Yeah, so what's that basically telling you is, hey, you are going to bring the rates down at some point. You can't just be aggressive. So the bond market is telling the Fed, you're bluffing. There's no way you can continue to increase the rate by 1%, 70 basis points without breaking something. So really interesting. And we are mostly equity traders, but we have to pay attention to these, right? So if you got my newsletter, I talked about maybe using some leverage product for bond and going long some of the 10-year. I didn't pull the trigger on that trade.
What is that? Do we have any leverage product for
Yeah,
bonds?
we got, I think TMY is one of them. It was in my newsletter. I can get that. Give me one sec.
Yeah, no, that's fine. But yeah, as you see, the 7 to 10-year treasury is right now it's trading at $100, up 1%, and the TLT, which is 20 years, is up 3%. Yeah, it's such a crash that they had. From 155 to 113.
Yeah, really cool.
TMF,
Yeah, definitely. They absolutely got bodied. A really cool thing that I saw on Twitter that I thought I'll share with you. This is the 5-year inflation expectation, which is the orange line, and the blue line is the crude. So just to give you some example of what 5-year means, it means what the market thinks the inflation is going to be 5 years from now, but 5 years from now. So if you're in point 0, and this is 0.5, and this is 0.10, this inflation is measuring this inflation. So basically a long-term inflation. This is a 5-year. So as you can see, Andrew, very similar. So I titled this slide, is oil the inflation? Really, they move hand in hand where the prices of crude is going to be versus the long-term expectation of where the inflation is at.
So if the oil price is coming down, the inflation is coming down as well.
Yeah, and we've seen. I don't know if you can pull up the oil chart. Crude has been on a way down, right? Like crude, commodities, a lot of this stuff are on the way down. Maybe it's because of the recession talk, but interesting to see. Yeah, someone's saying TMF. Yeah, I believe Bar. That's the correct ticker for that.
Yeah, that's the correct one. Yeah, excellent. Yeah.
Let's get into Ray Dalio because we also have Rinesh joining us. So he did a series of tweets, and let me see if I can bring them up. Yeah, this one is better. Let me make this a little larger so people can see. So he says, I hear commonly said that inflation is the big problem, so Fed needs to tighten to fight it, and everything will be good. I believe this is both naive and inconsistent with how the economic machine works. Markets and economic movements are driven by much simpler and more common sense linkage. And then he talks about how he wrote an article on LinkedIn. But the summary of that is saying this increase in Fed's fund rate is going to cause pain on the middle class and the main street. And it's going to cause a stagflation. So that was kind of his thesis, and he's kind of betting for a stagflationary environment.
So stagflation means that we have a small inflation, but the economy doesn't grow, and that's definitely not a good environment.
No, definitely not. So I don't know, Andrew. Are you a big fan of Ray Dalio or not really?
Well, yes, of course, 100%. Who am I not to be a fan of Ray Dalio? So definitely. Hopefully he's right. Hopefully that the Feds become a little bit less aggressive. I think the inflation situation has become a little bit political too, especially in the year of election, and hopefully that doesn't impact the slowing down the economy, because we love to, everyone loves to be living in a growth environment and the economy is growing.
Yeah, we are about 5 minutes to have Rinesh on the line with us. So our producer, if you can maybe send him the link and get him prepared over the next 5 minutes. We're almost done with everything, and we got a really good attendance as well. Ravi, I don't think anyone is experiencing any lag. It might be your internet.
I think overall the stream, from what we see, what we're doing is about 10-15 seconds delay, or maybe a little bit less. You never really get real time. In the chat room is pretty much real time, but on YouTube there's always a delay. But I don't think it's going to be very seriously impacting you.
Yeah, exactly. Let's get into our trading terminal. Anything specific, Andrew, you wanted to talk about? That's kind of all the slides that I had for today. Just talking about this inflation expectation, and the Fed swap fund. These are like high level stuff. Like not every community will tell you what the Fed swap fund is in 18 months. So, definitely we take pride in a lot.
Yeah, well, thank you so much, Adi, for doing that. I know it takes a lot of time to creating that material for you. I think right now what we are seeing is a market pretty much closed exactly flat. Bitcoin is really touching the $20,000. So, I mean, we have apparently our guest ready. So really nothing. And so we see still year to date, all the indexes are really down. Q's down 30%, IWM 25%, SPY 21%, and Dow Jones 16%, deep into the bear territory of major indexes.
Yeah, so our Rinesh is almost ready to join us. We can't wait. Just before we get Rinesh on the line, Bill is asking, hey Artie, what's your hypothesis on the 200 crude at this point? Bill, that's a great question. So I think it was maybe a month ago or a month and a half ago that I said potentially crude could go to 200. And my logic there was kind of analyzing what happened prior to global financial crisis and how the oil behaved, and really adjusting it based on increasing prices. So doing some inflation adjustment based on price increase. And the number that I came up to was about 165 to 170. So it was very likely that the oil and crude could go to almost 170, around the 200, without causing any demand destructions. So that was kind of part of my thesis in saying that, hey, oil could easily go to 200 without really causing any major demand destruction, because we saw that prior to global financial crisis. I still believe, I don't think oil is going back to the $60 that it was at 2019 prior to the COVID. I'm still pretty bullish on energy, but again, this financial market, if you've been involved with it, I've been involved with it, it's all about new information, and the method stays the same. You get the information and you try to process it and come up with the theses. Hopefully that kind of answers your questions. If we could get Rinesh on the line, we are very excited to have him on. My producer is sending me the signal that he's ready, and we got about 130 people in the live, so that's definitely exciting.
Give us a thumbs up, guys, from all of the 132 people that are watching. We appreciate a like because that, first of all, is a great welcome to Rinesh, our buddy, and also, help us support and grow the channel. Rinesh, thank you so much for coming. Can you hear us?
Yeah, Andrew. Good afternoon to both Artie.
Well, he hasn't said
Can you guys hear me?
Yeah.
Can you guys?
Hey, Rinesh, go ahead.
Yeah. Can you hear me? Test
yes,
1 2 3.
Yes, yeah, we're good. Awesome. Yeah, absolutely.
First thing is big hello to Artie and Andrew, and salute to the whole BBD family. It's awesome to be here and share my story. Absolutely. Thank you for letting me do this.
Well, thank you so much for coming, and really appreciate your time. You didn't have to come. I know it's really scary to share these stories, but I think it's very motivating. I really, really appreciate for giving back to the community.
Sure. I think BBD has given so much. This is the least I can do. And the reason I'm doing this is because usually, when you look at a lot of videos, the story is all about, I bought some 300,000 lamb, a car or something like that. So my story is about what really happens in the trading world, how I entered here, and what is the reality of it, and it is just not as simple as you click buy and then you're thinking it's going to go up and you're going to make $10,000 that day, or you go short and cover for 10,000. There's a big learning curve, and in spite of you reading a lot of books and understanding a lot of terms, it really takes a lot of time to be in the market day after day, looking at the charts, experiencing that firsthand to understand what does this different thing really mean. So let me know if you guys have like specific thing you want me to start with.
For
and
sure.
I will.
So,
I will.
What you're telling us is you're not going to share a Lamborghini story with us? Is that what you're telling us? No, there's tons of questions. I was prepping the questions this morning, and there's a lot of stuff we want to get into. So, Rinesh, just give us kind of a couple of minutes run through of where you started your career, how you got involved in trading. Kind of walk us through your journey a little bit, without giving us all the juicy stuff, because I want to get into them.
Sure. Okay. All right. So, guys, I've been in the software field for almost 18 years. I was solutions architect. I did a lot of programming, and I also did a lot of financials and stuff like that. And I was good at it. I absolutely did that and worked very hard, and that was my passion. So, when it is something is your passion, the number of hours really doesn't matter, right? But in hindsight now, I feel that when you're working for someone else, you need to be kind of a little bit cognizant about what you do. So COVID happened, and it changed the world. It changed the lives of many people. And during that time, a bunch of our cost centers in the corporate closed down, and I was nominated for bye-bye. I really didn't take that news very well, and it felt very personal. In 20 years of corporate world, 23 years of corporate world, this is the first time when you feel, oh, this is what the layoff or whatever feels like. But at that time, what happened is 1 year back, I was investing in a few things, and I was subscribed to Motley Fool and different stuff. And so most of them didn't work out because they tell you to buy when it's at the highest. I paid a package for cannabis stocks, and it didn't work out. But
Yeah.
I did something. I did some research on a couple of stocks. It was the EV sector, and I bought a bunch of Neo and a bunch of Tesla. And 8 months later, I mean, it was like, I don't know, 1,000 times, 1,000% up. And I just thought, oh, you know what? I am the king. I know what I do. And,
You can do it.
and to be very honest with you, at this time, the time I'm talking about, I didn't know anything about that there is a trading platform and brokers, how that works. I was with Merrill Lynch for so long, and I had a manager, and he did stuff. They're all fired now, but so, I do everything myself. So I a lot of ads started coming in YouTube, right? And bunch of people having this little spicy YouTube ads sitting near either on their private boat or cruise, or with wad of money. And so I said, you know what, I did really good in Tesla and Neo. I think I'm going to do this, and I will be independent, and I don't need. Um, the intention was not bad, but I think you underestimate what you get involved in. And I said, and I then bunch of ads started coming nonstop. So I decided, I will join thing, because they said that they do alerts, they have this proprietary system,
Yeah.
and they tell you when to enter. So now I was thinking to myself, man, I think that sounds pretty good.
Yeah.
They tell you, you buy and you make profits. So that's how I got into trading,
Yeah.
and I joined one chat room. And I'm not going to give name about any chat rooms because they really didn't work out. And
Yeah.
but I accept BBT, who has made me independent. And I'm very happy. So
Yeah.
ask away, RD. I mean, I don't want to kind of drag on a point too long.
That's awesome. Thank you so much for sharing this. Definitely
Sure.
huge. Like what an amazing story. It's a lot of people when they've been working with corporate, when the layoffs happen, they take it so personal because they've really given their sweat and blood. Like Andrew lost.
That was
his-
exactly
yeah.
my story. I
Yeah.
got laid off from my job, and I
Yeah.
was unemployed for 5 months, and that actually got me to move into trading. I actually did something. I had another job after that because I needed the income until become a trader. But yeah, it's just a lot of time. The bad things that happens to you in life can shake up you for better.
Yeah.
And I read something that the life takes you through the seasons, ups
Yeah.
and downs, like exactly
Like the market. There's a
the
cycle.
market,
Yeah.
or the whole universe.
Yeah.
You have the spring, summer, and then fall and the winter, and then you flourish again. And that's that I learned that by myself in detail.
Yeah, we had a friend exactly around the same time that you were buying Neo and Tesla and making a lot of money, and he was a realtor, successful realtor. He was buying these speculative stuff, making a lot of money, and he thought that, oh, this is so easy. He wanted to quit his day job, and of course he also learned a really valuable lesson that market, if you don't have a method and a systematic approach, market can be brutal. Rinesh, then in your story, in your journey, you kind of got into BBT and you really resonated with Ed and his style of trading. So kind of walk us through what about Ed really stood out for you, and how were you able to kind of turn it around?
So when I was with BBT. I mean, I joined BBT in July 2020, and and the reason I joined is because I read Andrew's book, How to Day Trade for a Living, and I was a little bit floored to how many things I did not know. I somebody was telling me buy here. Oh no, okay, it has gone down 5 points, average down, and we are going to do this. And I read that book, and his story about how he lost his job and how he started trading and he became successful. It kind of resonated with me. That was that was a turning point where I said, um, somebody has done it. Bunch of people have done it. 90% people don't make it, but I want to focus on the 10% people or 5% people who do make it. And I joined BBT, and even though I joined the BBT, when I looked at the DAS platform to trade, the execution platform, I was floored. I was on Merrill Edge doing, entering stuff, hitting the buy buttons. I was totally, I was floored in the sense that how much leap I have to take
Yeah.
to even enter a trade. And I copied Andrew's the execution file for DAS, and I kind of enhanced it over the months and year. Um, and the first thing when I joined BBT was, um, damn, no one is giving me alerts. What the
Yeah.
hell is going on? So I said, you know what? I will keep the tab open. Maybe one of them is going to give me an alert and I will enter it. I want the people on this call to understand that when you go into chat rooms where they just give you alerts blindly, you become so dependent psychologically, emotionally, you do not think. You are giving full faith in someone who has told you a story, and the story goes really crazy, right? Oh, I have been a market maker for 20 years, and this guy who's joining us, he's 25 years. Look, I don't know if those stories are true or not, but at the end of the day, if you don't have the leash of your trading life, you're going to get screwed. Pardon my
Yeah.
French, but so then what happened is I went back to the old chat room and they were still doing these alerts, right? And then this one guy came in and there were I entered a bunch of swing trades, right?
Yeah.
And they were so confident, and that's how I lost money. I did not lose money because of day trading, because if it goes certain below a certain limit, you get scared because money is so personal. Swing trading, uh, it has gone so much against you that then they tell you to average down and stuff like that. So I was part of BBT and I watched a couple of videos, but my mindset, my psychology, my dependency on alert was so big that I just wanted someone to tell me what to do. And I wanted to understand that this is something I didn't like. All my life, I have been very independent. I have been a solutions architect in my previous job. I create stuff.
Yeah.
I control the stuff I do, you know. And then my all the accounts started dropping by 35%, 50%, finally 75%, and that was terrible. And I had to make a big decision. I came back to BBT, and I decided in August 2021 I was not going to trade. Well, before that, I didn't trade for 4 months. The reason I didn't trade for 4 months because all my margin was stuck in all the stocks that had gone down 75%, and I could not more. That was the most painful time, and I started watching Jared's video in the morning,
Yeah.
uh, and I started watching Andrew and Brian take thing. I started watching Thor, and other mods and what they do, and I had to make a big decision. And to absorb that much loss of my capital, I had to dissolve all my long-term investment. Tesla was gone. I had to sell it off. Neo was gone, and I decided I'm not going to trade for 1 month. And then in August, I started learning and spending a lot of time in education center and seeing what other people are doing. My
So
confidence was
that's a very
extremely
good
low.
point, Rinesh, that you mentioned that you took some time off, and that's very important. I think I want to I had some very very heavy losses as well, and one thing that I think you should do is you take some time off to
Yeah.
reflect, to
Yeah.
absorb that loss. Otherwise, you become a gambler and just want to keep going and make it back. It has
Yep.
happened to me, and Harvey has stopped me.
Yeah.
Just don't do that. You just keep losing, and that's a very very important thing that you mentioned.
Yeah, definitely.
Yeah. Yeah, it just
So what
consumes you.
is Rinesh? What is kind of your go-to strategy right now? What's is there one or no? You got like a bunch of two in the
No,
toolbox.
I do a few. This January, I Ed had joined BBT, and I watched him, and I absolutely love that guy. He keeps things very simple. He's very down to earth, and he I did one-on-one mentorship with him, and he teaches you orbs. The first 30 minutes, and then we look at the linear regression channel. I think Ed has upped my game, and that's why I don't know. I'm very thankful to Ed. I'm very
Yeah,
thankful for Andrew to bring Ed. I know Ed was also Andrew's mentor,
yeah,
and it did help. It did help. So I do orb, and but my exit is kind of a little quicker if I feel, depending on the stock. If it's a stock with minimal spread and it kind of takes its time to move, I give it some time to work. But if it's like Nvidia, boy, you better get out there
yeah,
in a
definitely.
couple 280 yard losses. Otherwise, that is going to be a big thing. So now I think my strategy by learning from Ed on different things is I definitely look at a lot of earning stocks. I look at which stocks have a positive guidance, which have inline guidance, and which have a negative guidance. Right? You give it a couple of days, and the strong stocks, I'm very bullish, and the best setup I feel is the orb, and it keeps going up. But you have to make sure that you look at the linear regression channel that Ed has taught us, and you realize where is the resistance. Nothing
Yeah,
goes on forever. Don't be greedy. I partial at a good points. I think I used to take about 75 cents profit and get out. I think my recent trades, if they trend, I let it go for a few points. I mean,
good,
if that's you take
Am-
300 shares, that's $900.
amazing.
You're done for the day.
That's
so,
awesome. Yeah, that's really
so I like pullbacks.
Go
Yeah.
ahead, please.
No. I like pullbacks, and the few technical things I follow is moving averages. I have 9 and 20 for immediate entry and exits. I have 50 for support, 100 for support, and then 200. And I also have multiple time frames. I always have SPY on one side, and then I will have like a 5 minutes. That's a minimum uh, time frame I use, and then I will have a daily during the morning to get the levels, and then I switch it to 60 minutes. And I use Thinkorswim for linear regression.
Oh,
So
fantastic.
pullback for strong stocks, retrace on weak stocks, and I read a lot of articles much faster than I used to. Things have begun to become more sense, makes more sense now. They didn't used to make sense. I didn't put much effort. I didn't know what guidance, and they beat earnings, and you don't want to enter that because
Yeah.
if they have lowered their guidance, boy, you're in for surprise.
Exactly. That's awesome. A huge shout out to Ed. He's been amazing, and his earning trading is absolutely fantastic. What a great addition. Rinesh, you
Yes.
talk about how and that part of your story really resonated with me. How your retirement, lost 75%, and build it back.
Sure,
And
yeah, I did. Yeah.
I have your equity curve here as well. Really really remarkable. My question now is, you took that 1 month off, you regrouped, and something clicked for you. So, any piece of advice do you have for people who are really struggling with consistency, or are having a bad year, maybe 2022, or kind of a losing streak for them? Any piece of advice you got for them that helped you?
Yeah, so absolutely. So the first thing you have to understand that trading is a little different than your 9 to 5 job, right? You're required to be in 9 to 5, and you get projects and you work on them, and you're there, and then trading. Most of your work goes in planning your trades. Mark Douglas says, plan your trade and trade your plan,
Yeah.
and you spend most of your time to create your watch list. And I follow a certain thing to create my watch list. And then once you create your watch list, you mark some levels, right? And you wait. You literally wait. And I'm telling you, this is not how I was. My fingers were like magnets, I wanted to just click because of FOMO and ROMO. And I just
Yeah.
clicked. Somebody's taking a trade. Somebody in the chat room will say, "Oh my goodness, man, I made so much in this trade." I will not even look where the price action was.
Yeah.
Today, all I look at is price action.
Yeah.
Everything, your catalyst, your news, your volume, your moving averages, everything is saturated in price action. If you can learn how to read price action, that's it. That's all that's needed. So if people are struggling, what I will say is you really don't have to take 10 trades. You don't have to take so many trades. You you learn a strategy. If you're looking for pullback for a strong stock, you wait for it. Even if it takes few hours, so what? You know, and you take the trade. Once you make a profit and it meets your target, you start partialing it. Keep a portion for if it does go to the moon. But then um, be content with that day. Close the shop. You're done. I mean, what you cannot do in the most volatile time, don't try to achieve it in a choppy time. Do not try to
Yeah.
achieve it after hours. Why?
Yeah.
I mean, see, the reason a lot of people come into trading for freedom of time,
Yeah.
independence. So look at Andrew. I mean, those things kind of keep repeating in my ears. I'm done for the day, man. Either he made $2,000 or $7,000, or he made $2,000 loss. He is done for the day. He goes on, and I really struggle. I really
Otherwise, it
struggle.
becomes a gambling for you, Rinesh. If you don't do that, it becomes
Yeah.
gambling. It's so mentally addictive that you just have to let it go. Shut down that platform, get a life.
I think especially people like we always think it's a 9 to 5 kind of like, so we have to work 8 hours. We have to be glued to our
Yeah.
screen 8 hours.
And new
But the whole
traders,
point of trading is you want to be done. Like one of the things I love about option trading is I set that spread on Tesla this week, and Tesla hasn't moved at all. So I don't need to look at Tesla every day.
Yeah. And people think that trading is if you put more screen time, you become a better trader. And I
No.
think it's actually the other way around. It's just if you start spending a lot of time on the screen, you might actually develop the habit of over trading. They say in the professional athleticism, the professional athletes, they think that if they practice more and they put more pressure on their training, they become a better. Well, no, it's actually not. If the sleep, the amount of sleep that they're having has more effect on that. So
Yeah.
it's very important to know that only 2 hours is enough per day, really. Literally, I'm doing it live in front of everybody. You
Yeah.
don't need to spend a lot of time over trading and dealing. And it's an emotional stress as well, plus it can be gambling.
Yeah.
Yeah, and
Yeah.
Rinesh,
Absolutely.
you talked about ROMO and FOMO as well, right? Like, especially in a chat room when somebody said, "Oh, I made like 10 grand," or "I made whatever." To myself, I have my weekly goals. I'm grounded. I know my account size and my risk taking. What are you doing to not get impacted by that ROMO and FOMO? Like seeing somebody made 5 grand and you're like,
Sure.
"Let me overtrade and make some more money."
Sure, sure. If they have made 5 grand, be happy for them. I mean, cheer them on. You don't have to,
Exactly.
you don't need to be in a competition. You congratulate them. But the reason, the way I have, guys, I'm not going to be a hypocrite. Okay, FOMO and ROMO is very real,
Yeah.
very real. It happens to all of us. I bet it happens to Andrew still. I mean, I keep giving Andrew's example because I feel he has so much experience, and I read his book, and he's the reason I'm here. So anyway, I think to avoid that, you have to develop patience. And I'll tell you, I read Trading in the Zone. I read bunch of psychology books, and after reading those books, I exactly made the same mistakes they say not to do. I mean, I literally did
We all
that.
have done that. We all have done that.
Yeah. And what I want to tell you is, guys, give some time. Give some time to understand what does discipline mean. You won't know what discipline means unless you've spent some time in the market. You,
Yeah.
you won't know. I'm
Exactly.
sorry. I mean, it takes time. But there comes a point in a trader's life where the pain has become so much that you have two things to decide. This is not for me because I cannot improve, I don't know what to do, or take it heads on, slow down,
Yeah.
enter the trades when you have decided when to enter the trades, respect stop loss, because my previous chat room, when the swing trades dropped 75%,
They told you
I
to
really
average
didn't
down.
think it would, because I didn't know a stock could drop so much.
Yeah.
Drop stock can have no bottom.
Yeah.
And so you have to create some rules for yourself. And the way I know a lot of people do R&R, I don't do that. My take on stop losses: don't lose so much that it takes you a whole week to make it back.
Yeah.
Okay. uh, uh, take a stop loss, because you know what, say for example you take Nvidia, and I bought 300 shares. It dropped 2 points, so that's a $600 loss,
Yeah.
right? If that was my plan, I need to get out, because if it drops 10 points, that's $3,000 loss. And you know what happened to Nvidia, right?
It could drop a lot more.
All this
Yeah.
yeah.
Or it
So
could
so you know,
bounce. It's such a volatile
yeah,
stock. Like look at the
it
average
is.
true range and you'll see it. Yeah, exactly.
Yeah. So stop out at $600 loss, because that was your plan. That's your max loss. It drops about 10 points. It might be at a good moving average. It might jump 4 points. Just you make more money that way.
Yeah.
But what I'm trying to say is, um, this is very important, that don't treat this as a 9 to 5 job. You're a trader. This is the most difficult job, guys.
Yeah, definitely.
And the main thing is the mind game.
Yeah.
You know,
Master the
I'm
discipline.
done. Yeah, yeah. Once you make see if your goal was something, and I took few good trades above my goal, there is no reason for me to be there. I want to take my furry four-legged kid to the park, and we just want to sit there.
Exactly.
Trading life is not about Lamborghini and this cruise lines and a lot of parties. It is about
Freedom.
Andrew's lifestyle. I mean, he goes marathons, he goes climb mountains. I mean, look at, he goes to sleep.
Yeah.
Guys, he takes a nap, and
That's
I've
true.
started taking a nap in the afternoon. Maybe I'm getting older too, so
Yeah.
but take a break, do
Re-
something around the house, read the book,
th- that's amazing.
and next day the market is still there.
Yeah, Rinesh, what a great point. Really, like trading is all about freedom, and that's what it's about. And really sticking to your plan and having the discipline. We have about 150 people watching us live, so give us a thumbs
Hey
up,
guys,
subscribe to the channel. A huge thanks to Rinesh, for agreeing to help us. I'm just going through the chat to answer some of the questions. Someone's asking about stop loss, and is asking Ed uses mental stop. How do you manage your stop? You kind of touched on that. You don't want to lose more than a couple of days of earning. Is that correct? That's how you kind of manage your stop losses.
yeah, I think I go with a couple of 280Rs, but sometimes, if I feel the stock is really strong, there is always this profit taking, and you should let the trade work a little bit. But that comes with price action. But say for example, if it's orb, right, is the first 30 minutes. After the 30 minutes, if it goes up or goes down, it has already set the tone for the day, right? So you don't want to be stuck in that, because
Yeah.
once it drops below a certain point, there is nothing you can do. I mean, yeah, and very important thing is, what I've learned is, I do not convert my day trade into swing trades. I just don't do it, especially in this market. When the
Yeah.
market was nice, oh, you have really bought it at a thing, and it has moved like 20 points, and
Exactly.
you stay there. It does make sense, because something terrible has to happen for it to gap down. So these things come with experience, and I'm going to be very humble about this. The market has humbled me. I This is just my end of second year, but I have gone through excruciating pain and headaches and heartbreaks and depression, that I had decided to take this under control. And I have decided that this is what I want to do. um, and and if it takes a little patience to just enter those few trades to make a certain amount of money a week, making money is not that difficult.
Yeah.
Keeping it
That's the
and
most difficult part.
That's the
Yeah.
most
yeah,
difficult part. Yeah.
yeah,
Rinesh, thank you so much, for coming on the show and
yeah,
sharing
sure.
your story. I mean, it's all about that freedom, and this it's people get so fixated on these equity curves, but it's not really about that. It's about what you're happy to make, how much you're happy to make, and how much time
Yeah.
and at the end of the day, you're working for yourself. That's the most amazing thing. You don't have to hear that bad news at a corporate world after a while. We got great attendance today. There are questions are coming in, but some of the questions are very specific. Do you have any bias on like the stock you pick, or is all based on catalyst? Do you have like a favorite stock you play, or not really?
I mean, it depends on the sector, right?
Yeah.
If certain sector is in play, then you pick some good stocks, look what they're doing, look at the supports and resistance. There are a few things I don't do. Besides the EV, I don't. I personally, okay. I mean, you can make a lot of money in Chinese stocks. I
Yeah.
don't do it just because I've seen like a couple of stocks the way they fall, and so do US stocks. It doesn't matter,
Yeah.
right? So I look at let me know and I can tell you my routine for the morning. But I like to trade tech stocks, and I don't have a bias for long or short. It absolutely doesn't matter to me. I look at the price action, and you can make money going long and going short. The only thing I don't do is if it's in an uptrend, be very careful. Just like we saw Nvidia fall 70%, Nvidia has also climbed in the same way. So be aware of that. I feel, and that's why you got to stop out, buddy. I mean,
Yeah.
if it's going against you, you can always make that money back. Uh, don't be Rinesh, who lost most of his money doing the following the trades. Get out of the alert system mindset. Here in BBT, if you see, it's so focused on education. And if you're too busy and you really want alerts, remember, understand one thing: you have to take the losses with the gains, right?
Yeah.
And the reason they are not doing the alerts, if their alerts were so successful, they will be hired by the biggest
Yeah.
hedge funds and banks and stuff like that. It doesn't work like that in real
Exactly.
life. Learn it's not very difficult, but keep patience. Take a break. You have to slow down.
That's amazing. I read a tweet from one of our members actually, who was a trader at Lehman Brothers, and his tweet was really interesting. It's like, when you don't respect your stop loss, it basically means you don't trust yourself to make that money back. That's what you're telling
Yes.
yourself. So when you get stuck in a trade and you don't respect your stop loss, but all you're telling yourself indirectly is, I don't believe that you can make this money back. You're incapable. And it's a really important, once you make that reflection psychologically, that's when everything changes, right? And again, this is from a guy who is part of the BBT, and he was a institutional level trader working at Lehman Brothers. But yeah, Rinesh, we went a little bit over time. I want to respect your time as well. Thank you so much for sharing your knowledge,
Thank you.
sharing your story. As Andrew said, we know it's a little bit terrifying, coming live. 100 people and thousands of people are going to watch this later, but we really appreciate it. You, like members like you and stories are like you is really what make us to do this show. It's a lot of research and production, cameras, but it makes it all worth it. So thank you for coming on. We really appreciate it. Andrew, anything from you?
No, thank you so much. That was amazing. I think we had a lot of people staying for your sharing your stories, and thanks for all. We had a lot of likes. That's one of the maximum number of likes that we got from the videos. Thanks for sharing that. Thanks, guys. Give us a thumbs up for Rinesh sharing this story.
Exactly.
And really, really appreciate you staying time with us. So see you tomorrow in the chat room.
Yeah.
And I think we have to end the show, yes?
Yeah, we have to end. Rinesh, thank you so much again. And by the way, for Trading Terminal, we're looking for a solution architect. So if you wanted to come out of retirement and do some solution architect work for us, we'll be happy to have you.
Well, everybody on the call, thank you so much. All I wish is good luck to you. And uh, it is so possible. It is so possible. Just it's an art. We need to learn the art of trading, and watch Andrew and come to the jungle. We call it jungle, the Ed's room. He's amazing, man. I love that guy. Well, thank you guys. Thank you so much.
Amazing. Thank you so much, Rinesh, for sharing your
Thank you
story.
so much.
Thank you.
Have a good day.
Have a good day. And thank you, everyone, for joining. Still 138 people. We really appreciate you sticking around. Give us a thumbs up. Subscribe to our channel. We'll see you tomorrow. Thank you. Bye now.